So we definitely have a lot of crazy stuff happening to Senseonics stock again, also being up now more than 10% since the recent lows that happened as a form of recovery after gapping up almost 150% to new short-term highs as a result of pulling back from the insane 1,500% gaps in January of this year. So as we are also trading above $3 again with the second quarter earnings released just about a week ago, what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And the definitely craziest thing about Senseonics also making it one of the especially amongst investors most well-known manufacturer of glucose monitoring systems, or CGMs, for people with diabetes that drastically help reduce any kind of effort for actually testing glucose, are the insane 1,500% jumps at the beginning of the year we mentioned earlier. But what truly differentiates Senseonics from a ton of other meme stocks that gapped up some insane percentages in January is that it certainly wasn't the end of the story, literally spiking almost 150% just a few weeks later, while also going up right now since the lows from the second highs. But the incredible enthusiasm from investors the stock recently experienced again is mainly due to one super important reason we quickly have to go over again before also coming to the here highly emphasized partnership with Essentia as well as some short squeeze data, despite talking about in more in-depth in the last video, the new earnings report including second quarter revenue. And we're talking about bringing in over $3.3 million in income again, with almost $1 million out of the US and more than $2.3 million from international activities and sales. Furthermore, total revenue from 2021 is now estimated to range from $12 to $15 million, which basically is nearly exactly the same as the $15 million we predicted in our previous videos. And with roughly $200 million in cash on hand and only $110 million in debt, this appears to be a good deal right now. The recent big price jumps in price, however, are mostly attributable to a completely different cause, some tremendous hype, particularly amongst retail traders, causing the stock to rise by the incredible percentages we mentioned earlier. But in the end, it was essentially just one factor that enabled all of the surges in the first place, the stock's near-perfect meme stock conditions prior to breaking out. And we're looking at a short interest of up to 25% at the time, which, when combined with the single-digit price and small float of just 280 million shares at the time, made Senseonics stock equivalent to most meme stocks that had recently gapped up massively as well, enabling the short squeeze at the start of the year. And, aside from Senseonics' remarkable progress in commercializing its product line in the multi-billion-dollar diabetes market, there is one thing in particular that makes the company super interesting and sets it apart from its competitors, Senseonics Eversense XL product. In fact, it's exactly this commercialization of the Eversense XL product that most investors are betting on right now. These devices, however, haven't just sparked investors' interest. Essentia, a significant competitor in the worldwide diabetic care market, recently collaborated with Senseonics and has now been revealed to take over the company's full commercial activities in the new earnings report. They also decided to distribute the Eversense XL product throughout Europe, opening up a massive new market with a lot of potential. Furthermore, Essentia has extensive industry experience, which will be particularly valuable in establishing the brand in Europe, whereas Senseonics Eversense XL product offers a number of significant benefits over its US competitors. So in light of this as well as the recently reported earnings, Senseonics definitely has a bright future, particularly in the fast-developing diabetes industry. Furthermore, we have a very strong product range that would allow them to literally lead the worldwide diabetic care industry with some unique features that have some huge advantages over its competitors. Alright, if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot and see you next time.